Today we're going to cover invoice against contract. I'm going to break this into 5 separate videos to downsize it into more palatable sizes. The first will be an overview. The second will be the options and flexibility of invoice against contract. The third will be the auto invoice and evaluated receipt settlement. Then we'll roll into receiving options, and then the last video will be a demo of the setup and configuration. So you can also set up a approval rule if you needed to have multiple approvers per contract. And so this is where you negotiate a single agreement, say landscaping services for an entire region or for the entire company. And so you can actually build out the individual line items. And so line 1 would be for region A, line 2 would be for region B. And then that would effectively, when you build those line items out, and effectively, you set the GL accounting for each of those properties. So when they invoice for region A and region B, the coding gets properly allocated. So this can be a labor efficiency from a setup standpoint because you don't need to generate individual SOWs for each property. You can generate one master agreement and then execute all the properties on a single master. This is also cleaner than doing receiving because if you have all of the properties doing receiving and working on a single receipt, because all the line items will be generated into a single receipt, that can get very messy with a lot of individuals trying to do receiving. And so you can set this up in that second process above where we talked about the using the invoice approval in lieu of the receipt as a work validation. And so this is really ideal. In your invoice reconciliation workflow, you will use a lookup table. An example of that is provided below where you'll have a contract ID and then the line items, and then you'll have the individual user's name associated with each line item. So when an invoice comes in for contract 123, line 1, it'll send it to myself. Line 2, it'll send it to Mark Harris. Line 3 will go to Mark Darwish. Next, let's speak about financial limits within the invoice against contract buy channel. So there are release limits that we've mentioned earlier, as well as max limits. Ultimately, within the header level, a maximum limit can be defined. So that's if I sign $1 million contract, I don't want to pay $2 million. I want to set it to $1 million. This can include or exclude taxes and charges, shipping, special handling, etc. There's a radio button that allows for this. You can also set whether it's a hard limit and a tolerance. So that means if it's a tolerance, they can go above a certain threshold. So let's say that it was roughly $1 million contract, but with P&E and some other spend in there, maybe it could be a 15% overage. You can set that tolerance, and then you can set a hard limit that will turn off the ability to invoice after that amount is exceeded. Sometimes companies have a hard time with the hard limit exceeding because of the fact that they're actually executing amendments to raise the value of that. And so some companies prefer not to set the hard limits because they're really in process of doing amendments to raise the maximum amounts and don't want to impede business. Notifications can also be configured so that whenever that gets within a set limit, and you get to set the limit there, it will say, hey, you're at 85% of your total spend. Send a notification to the project manager just to inform them that they are close to their total amount. The preload amount, which is a cool field, allows you to preload the contract with legacy spend for legacy agreements. So let's say that we're maybe a net new customer, or we're still going under contract conversion process, getting all those old contracts in the system. And so I have a $1 million contract, but I've already paid 500,000. Well, I really don't want to change the maximum amounts to be 500,000 because it was a $1 million contract. And so the preload amount is exactly what it sounds like. I can load it at $1 million and then preload a $500,000 that I've already spent against it so that the system knows there's only a $500,000 left. Then you also have your item level limits. So once you get past the header limits, on the actual items, you can set limits by dollars or quantities. And so if I have professional services or some type of services contract, I could set it and say, I only want 1,080 hours, and that's going to be a hard limit. They can't invoice me for more than 1,080 hours on this line limit. And so sometimes you'll do line limits, sometimes you'll do the aggregate limits. If you have rate cards and you don't necessarily know the resources, that's when you can use that header level maximum versus if you have very defined resources, the number of hours they'll work, and they may not necessarily change between, say, a functional lead and a technical lead or something like that. Sometimes companies don't know the exact mix, and so it's better to use that header. Sometimes you know the exact mix of hours, and so it's better to use that item level limit. I like using item level limits where it's possible just because it's a little bit more defined versus that header level maximum. And then finally, release limits. So again, we talked about releases. This is where you will cut requisitions against your contract. This is a lot of times minimum order quantities or dollar amounts for free delivery and things like that. You can set your release limits online or a catalog level. If you have a catalog or supplier level, you can do it on the supplier catalog level as well. Thank you for the time today.